In this video, we explore the distinction between default surcharge and penalty under the Income Tax Ordinance of 2001. We will look at sections 205 and 205A regarding default surcharge and sections 182 and 182A concerning penalties, highlighting their compensatory and punitive natures. Why does this distinction matter? Default surcharge acts as a compensatory charge for the time cost of unpaid money. In contrast, a penalty is a punitive measure for specific defaults like non-filing. Often, both are levied together, so it is important to understand they are not alternatives. Default surcharge, covered under Section 205, applies when tax is not paid by the due date. It is a compensatory, interest-like charge that accrues over time. While largely automatic, it is reducible under Section 205A if the underlying tax or penalty is reduced on appeal. Section 182 defines penalties, which are punitive fines for specific offenses like non-compliance. Unlike the surcharge, these require the commissioner to follow due process, including issuing a notice and hearing. These penalties serve as a deterrent and are appealable under Section 127. This comparison table highlights the key differences. While default surcharge is compensatory and calculated mechanically based on time, penalties are punitive, fixed or percentage-based charges triggered by specific events. Both can apply concurrently to a single case. For default surcharge, the rate is generally KIBOR plus 3% per annum. It is applied to the unpaid amount from the due date until actual payment. It is not capped, but it can be reduced following an appeal or exempted under Section 183 in cases of genuine hardship. Section 182 lists various offenses. Examples include failure to furnish income returns, wealth statements, or required records. The penalty amount depends on the specific nature of the default and the type of taxpayer, and these amounts are periodically revised by finance acts. Relief mechanisms are available. Section 183 provides exemptions from both penalties and surcharges in cases of genuine hardship. Section 205A allows for the reduction of the default surcharge if the underlying tax liability is lowered through an order or rectification. In summary, plan your cash flow to avoid default surcharges as they accrue daily. Remember that penalties can stack on top of these charges. Always check the current Finance Act, as rules and rates are updated frequently, and seek relief under Sections 183 or 205A when appropriate. Know the difference and stay compliant. Understanding these provisions helps keep your tax affairs and your wallet protected. For specific advice, you may reach out to TM Tax Consultants via our website, WhatsApp, or social media channels. Thank you for watching video. Please don't forget to subscribe our channel.